The fundamentals have never changed. They remain unshaken and pretty much the same. The institutions behind SWIFT, an outdated legacy messaging system for moving value, is discussing innovation. Ripple and XRP is the backbone of that innovation. Funders of Ripple in the early days. If you really study these big players, these billionaires, they don't invest pilots or proof of concept. They back entities that have proven results and that are clear winners from day one. We're actually experiencing a monetary reset. The last time we had this, Bretton Woods, 1944, and then the second one we went off the gold standard in 1971. But what's interesting about this monetary reset is we have a convergence of many different technological disruptive innovations that are in the equation this time that we have never had throughout history. They can continue kicking the can down the road for some time. They have already planned for that moment. The architects of this system, you have about 63 major central banks that sit under the BIS, Bank for International Settlement. They oversee monetary and financial stability. What's interesting is they have been discussing openly blockchain technology. They're preparing the introduction for the new system. Going to have more than one world reserve currency. XRP is going to play a critical role as a bridge currency, remove all the frictions to serve the elites. It's not to serve you and me. There's a very high probability that there is going to be a correction or a crash. You don't know how steep it's going to be, but very attractive opportunity. Institutions, BlackRock, Blackstone, because this is what they love. They love a Black Friday sale because it allows them consolidating wealth and power. Physical, tangible gold any day. I'm not interested in this tokenization stuff, and I'll tell you why. You don't have full ownership anymore, even though they tell you you do. Your ownership is now conditional. It's not absolute.
Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am delighted to be welcoming a friend of the channel back on once again. We've got Vandal from the Black Swan Capitalist back with us today to talk about what's going on in the world and certainly the world of crypto. Welcome, Vandal. How are you?
I'm doing well. It's good to see you, Rupert. Thanks for having me on.
It is really great to see you as well. It's been a little while since we last caught up, and the demand to have you back was overwhelming. If I want to start off with some recent happenings before we get into what's happening in the world at large and perhaps crypto's role in it, maybe XRP's role in it. And that is over at Sibos, which was hosted by Swift in Frankfurt. There was an announcement that Swift, which right now is currently how money operates in regards to being sent around the world, an announcement that they essentially have or are going to launch their own distributed ledger. Now, many people saying this sends Ripple and XRP into irrelevancy. I guess one thing I want to ask you is, what's your thoughts on all of this? There's been lots of sort of back and forths on Twitter. Do you have any thoughts on this broadly?
Yes, I do. Well, first of all, I think the timing of the announcement is quite interesting. So to be very frank with you, a lot of these big media players, institutions, they really manufacture and give the green light for what news can be announced, when it should be announced. And usually the news, whether it's a narrative rooted in truth or not, there's always some agenda behind it. They are there to push ideas, shape public opinion and perception and essentially push a narrative. They're not there to report the news to serve you as a retail investor in any shape or form. So first of all, I don't place any significant weight on what they say. I'm always looking at the fundamentals of any investment, any technology. So from XRP, the XRPL, the digital asset, the native token XRP of the Ripple company, the fundamentals have never changed. They remain unshaken and pretty much the same. So regardless what they say, I find it ironic that the institutions behind Swift, an outdated legacy messaging system for moving value, is discussing innovation. Yet Ripple and XRP, the digital asset, is essentially by definition the backbone of that innovation. And it's interesting because if you're describing innovation that is designed specifically to move trillions in value cheaply, efficiently, energy efficiently as well, and aligning with the green agenda, which is the direction the world is moving in, then by definition, without saying it, they're indirectly describing XRP when they talk about innovation in that regard. So the irony is these institutions and Swift talking about innovation while XRP is really the backbone of that innovation for moving tremendous amounts of value efficiently. So
Major,
I don't place any weight on it.
yeah, major endorsement actually for XRP, right? Ripple as a company, or OpenCoin when it started in 2012, have been working on this since then. Swift are now coming out and saying, okay, maybe we should use a DLT or a blockchain for this.
Yeah, and what's interesting to add to your point is at the end of the day, there's a lot of criteria my brother and I look at before determining whether an investment or whether it's a company, a stock, a technology is going to have a high probability of long-term growth potential. And one of the elements in our criteria is the powers and the big money behind these entities. And as you said, OpenCoin 2012, if you really follow the money, you'll see that even the just one entity that early on funded Ripple was Andreessen Horowitz, the venture capital firm, which is the biggest one in Silicon Valley. They literally have defense contracts with the NSA, United States government, military, working with intelligence agencies. On top of that, they own a piece of OpenSea. They own a huge portion of Avalanche. A lot of these technologies that are considered decentralized, and a lot of these companies that have been around for a very long time that are making waves in the crypto ecosystem. That entity, Andreessen Horowitz, owns a piece of all of these companies and receives huge allocations of the tokens. So what's interesting is they were one of the early funding funders of Ripple in the early days. And if you really study these big players, these billionaires, they don't invest in and heavily back prototypes, pilots, or proof of concept. They back entities that have proven results and that are clear winners from day one.
Also, interestingly, changed money previously. You know, Anderson and Horowitz has actually been um, extremely right and influential in regards to the digital world that we currently use. And if you look at another backer of OpenCoin, it was, of course, Founders Fund, which, of course, Peter Thiel is the head of. Peter Thiel fundamentally revolutionized. He was the first person to successfully create essentially e-money with PayPal.
Yeah. Founders Fund, they put a huge portion into Ripple in the early days. And what's interesting is this guy owns a piece of, or he's connected to Palantir in a big way as well. So deep, deep ties directly to intelligence agencies, billionaires, institutions behind the scenes. This is not coincidence, okay? They're not just, rolling the dice here. Some of these entities have been chosen long ago based on the data, and these things don't happen overnight. And along the way, there is always going to be, and I've seen this in my career too, a strategic misdirection to sway the public and shape public opinion and perceptions. And not for your own benefit, but for the benefit of institutions and in some cases, national security. So just something to keep in mind. Don't place any weight or value on narratives and news, regardless what they say. As long as the fundamentals remain unshaken, then nothing's really changed. Just the narrative and the news. That's it.
The mood, as it
So,
were.
yeah, the
Absolutely.
move.
Yeah, no, and we'll get into some of the fundamentals in regards to XRP and its perhaps role in this world that we seem to be hurtling towards. Really, where I want to get onto is what's happening today more broadly in markets, because I think crypto plays a major role in whatever's going to come out of the kind of situation which we're going to explore in just a second that is taking place. There is a lot going on in the financial world right now. We see gold $4,000, I believe so, right? Better just double check that. Gold $4,000. Silver is on the cusp of breaking out into all-time highs. We're seeing central banks dump treasuries actually for gold, and we're seeing a whole host of other things taking place at the core of our financial global world. That leads me to my next question for you. What the hell is going on right now? All of these things surely are correlated. What do you think's happening as a kind of 3,000-foot overview right now with the financial world, with the money system, with how people are viewing value? This is a loaded question, but one that we're going to be able to pick apart.
Yeah, well, this could be summarized in one sentence. We're actually experiencing a monetary reset. That's simply what it is. It's a great reset. People give it different terminology, but it's a reset of the monetary system. So the last time we had this, we could say was, Bretton Woods, 1944, and then the second part to that was when we went off the gold standard in 1971, when President Nixon took us off the gold standard. Officially, that is when we lost constitutional money. So from a broad bird's eye perspective, we are experiencing and living through a historical moment in time, and this is basically a monetary reset. But what's interesting about this monetary reset is we have a convergence of many different technological disruptive innovations that are in the equation this time that we have never had throughout history. So we have failing fiat currencies globally, okay, which historically fiat currencies last anywhere between 50 to maybe 120 years, in that range. And world reserve currencies, you could say 80 to 100 something years. And we're currently at that point right now where we're seeing the early signs of the end of a fiat currency system and cycle. And we're not fully there yet, but we're living through it. What's interesting is the convergence I was referring to was we have failing fiat currencies globally, and this is because of reckless monetary policy, governments, deficits, printing money, because there's no tie to the gold standard, so they can print and create credit and issue debt infinitely, pretty much, and it's devaluing the currency, which is destroying our buying power. On the other hand, we have a disruptive technological revolution that we're living through, which is consisting of multiple technologies hitting us all at once at the same time, from artificial intelligence, 5G, robotics, and at the same time, blockchain technology and cryptocurrency revolutionizing the digital financial landscape. So it's a very weird time to be living in.
For sure.
But that's exactly what's going on in a nutshell.
And I think with weird times, confusing times, times of change, they can present unbelievable opportunities. And that's really a lot of what you do, isn't it, Vandal? You look for opportunities in a changing world and get ahead of the curve, get ahead of the kind of stampede before it looks for the exit. And it seems like what we're seeing, to really narrow down and to get into this, what we're seeing is a kind of run towards that exit, a kind of emperor starting to catch a glimpse of himself in the mirror and realize that he's naked. The fiat system that we've ended up on, and there's been some changes to it really since 1971 with the Nixon shock, seems to be coming to its last legs, not just in regards to the sustainability of it fundamentally, but also in regards to the belief in it. And when you look at what's happening with gold, when you look at what central banks are doing with treasuries, when you look at what's happening with silver, when you look at what's happening with assets, what people are essentially doing is going, we don't want to play this game anymore. Let's find an alternative value system outside of the one that we've been told to use. Do you think that's fundamentally like what to really pin this down fundamentally in regards to this reset? What is actually happening? Is it that people are losing faith in the system? Because why can't the Fed just go on and continue to print money and inflate the system forever?
Well, I have opinions on that. So, first of all, historically, if we look at every currency reset that has taken place throughout history, it's always been a result of unsustainable debt rising, high inflation, and eventually social unrest.
Yep.
And historically, that leads to a collapse of the monetary system, whether it's fast or slow. But the point is, every single time, the byproduct or the end result was an introduction of a new currency system. So, given where we are today, they can continue kicking the can down the road for some time. Obviously, they can. We just don't know when that hole is going to really break open in the system to where they have to introduce a new solution immediately as an emergency measure. I think they've already, well, not I think, they have already planned for that moment, because the architects of this system, you got to understand the power players here. And I think to understand that, it's important to understand the central bank system and the plumbing of it. Because essentially, you have about 63 major central banks that sit under the BIS. The BIS is the Bank for International Settlements. And essentially, this is the central bank of the central banks, and they oversee monetary and financial stability. This is what they say they do for all financial institutions and central banks around the globe. And what's interesting is they have been discussing openly in public, at conferences, and in their documentation and publishings, blockchain technology,
Yep.
new financial systems, central bank digital currencies, doesn't matter what they call it. If you look at the infrastructure is a centralized grid system, basically. So at the end of the day, they've been discussing this for some time. And the reason is because they're preparing the introduction for the new system. And the way they do this is by basically fading out the new system and slowly introducing a new system piece by piece, so that they don't have to introduce it abruptly and receive a lot of scrutiny by the public. So they have to do it piece by piece, like building blocks, little by little. And basically, right now, they can keep printing money and debasing the currency because eventually it's going to get to a point where something breaks in the system, or eventually we'll reach a point where people really start throwing their money on the street because it's not worth anything anymore. But currently we're living through a period where trust is breaking already as we speak. So you're seeing a flock of capital rotating into various assets across the globe. But for gold, this is primarily being driven, in my opinion, from central bank accumulation, physical gold.
Yeah, it's extremely interesting. A lot of what's going on right now. To your comment, you see Christine Lagarde at the People's Bank of China talking about Bretton Woods and talking about the need for essentially another Bretton Woods moment because of the world that we currently live in. And in doing that, introduce trust rails. Now, we know that ECB is exploring distributed ledger technology. We know the BIS has even gone as far as to mention certain cryptocurrencies like Ripple and XRP, XLM. I know you've done a lot of work on all of this. We've got Jerome Powell a few months ago mentioning Bretton Woods. We've got Christine Lagarde also asked about how they solve the debt problem. And she essentially just says, trust me, we're going to solve it. Okay, you know?
Well, I think they could kick the can down the road because they introduced the stable coins.
Yes.
So the Genius Act in the bill, the Genius Act in the bill, it explicitly says that stablecoin issuers have to buy an equivalent ratio of high quality reserve assets. So by definition, in practice, that actually means US debt and treasuries, US treasuries. So by default, as stablecoins grow, all these stablecoin issuers by default have to participate in purchasing US treasuries and US debt. So essentially, the way I'm looking at it is what they created is a captive permanent buyer of US treasuries, US debt. And basically, the whole purpose of that is to keep the system on life support. There's no other reason they would do that. Their whole goal here is to preserve the integrity of the bond market because that's the heartbeat of the system. And if that goes down, you have a total collapse. So they found a solution to kick the can down the road for a period, in my opinion, and that's the stablecoins, because now they created a permanent buyer for US treasuries. And we know stablecoin growth is only accelerating, it's not going anywhere, especially as all the value in the world slowly transitions onto the blockchain. Currently, the amount of value moving through the crypto ecosystem is almost equivalent to, Visa, MasterCard, and PayPal all together. So imagine once all that value starts slowly transitioning and moving onto the blockchain, what it's going to do to stable coins. And on top of that, what it's going to do to some of these digital assets that have a limited supply but superior utility. So, very deep subject, but essentially, I think they can kick the can down the road for a period. Eventually, something will break. They'll bring out the bazooka money, try to save the day with emergency measures and monetary policy. And that's just going to accelerate us into really the last end stages of the fiat currency. But historically, every currency reset or new currency system that was introduced has happened after the fiat currencies have really completely failed and debt levels were out of control and civil unrest erupted. Now, we're not there yet, but we're heading in that direction.
Absolutely. And it seems evident. And it seems like gold and what that's doing, a real flight and rally, I guess, in assets more broadly fueled by this is all pointing towards that. There's a big question around how we get to that. Do we need to have a catastrophe that leads to a valid reason to print? There's a whole load of questions around that. Stablecoins very interesting. The US are actively looking to adopt stablecoins for that exact reason, to help with their debt markets, and also to dollarize the world. To bring Peter Thiel in again, he spoke about this in 98. Spoke about the dollarization of the world enabled by technologies. This is exactly what's happening, of course, investor in OpenCoin.
Exactly.
It's very interesting, everything that's kind of taking place. One thing I do, as we're on the topic of stablecoins, predominantly dollar stablecoins at the moment, all countries, one damn good reason to be bullish on this technology is all countries are going to have to fight back against the dollar or get made irrelevant by it in regards to their own sovereign currencies. That means adopting DLTs. That's still to come, by the way. So do watch out for that. One question I have for you is, in this world that we're moving towards, what is the role of the dollar? So if you look at the world right now, after the Nixon shock, we essentially just went onto a dollar standard where the dollar was the backstop. When we talk about crypto, certainly something, we're going to come on to XRP in a moment, that is trying to enable an internet of value, the future that I see, or the new system that I see, is one where you don't have a reserve currency like the dollar, but you have all systems able to interact with one another, perhaps via a global reserve bridge asset, if that makes sense. Before we get on to that, let's talk about the dollar and what you think happens to the dollar in this sort of transition and into whatever the next system may be. What's going to happen with the dollar, do you think?
Well, I think we're going to have essentially, I think the dollar is going to remain a global world reserve currency.
Yep.
Now, it is going to go through its own evolution as we move towards a blockchain foundation for the monetary and financial system. But at the end of the day, the US dollar as a world reserve currency is still robust.
Yep.
Now, I know what you're thinking there. It's not, but here's the thing. There's a lot of misconceptions around the world reserve currency completely going away. So the system we're moving into is supposed to be a multipolar financial system where nations and their currencies have this level playing field, and that's because of interoperability kind of sitting in the center. That's what blockchain technology will allow. Now, the US dollar currency currently actually still has demand from other nations. But the difference this time is that there's a growing demand in physical gold alongside of it, and a decrease in demand of US treasuries. But currently, approximately 60% of all debt in the world is denominated in US dollars.
Still the majority
And
traded currency. Yeah, it's dominant.
yeah, exactly. So the thing is, the world reserve currency, which is the US dollar, still remains robust. But the paradox here, as it continues to remain robust as a world reserve currency, the currency debasement and the buying power of that dollar is declining. And that's what's taking place now. So the only solution to protect yourself, and people have seriously got to think differently about how they protect their wealth in this period of huge currency debasement, because it's different. And traditional methods and strategies aren't effective today as they were 20, 30 years ago. And the only thing to do is to buy assets and preserve your hold assets and save in assets that will hold and preserve their value and potentially carry that over as we go into the new system. For example, I don't think it's very intelligent to be investing or buying bonds, even though it's supposed to be relatively the safest investment in the world. I think it's the riskiest investment in the world, given where we are in the stages of the cycle from a monetary reset perspective. So,
Absolutely.
yes.
Yeah, no, I absolutely agree. And I love what you said about, I don't necessarily think the dollar is going anywhere. I just think its role may change. And what you sort of struck on at the start there about a multipolar world. Mark Carney, Prime Minister of Canada right now, he came from the Bank of England at a time when they were
Yeah.
actually using Ripple to pilot their CBDCs. Whether that's a coincidence or not, he recently spoke about exactly that, this multipolar world that we're in and the need for a multipolar financial system. Now, right now, that hasn't really been able to work because there's liquidity issues with other currencies. There's a whole host of issues. The really interesting thing for me is that I'm now at a stage where if anything can facilitate this multipolar world or multipolar system, a kind of another Bretton Woods where instead of moving away from the dollar just becomes one of many systems of value that can interoperate globally. Probably one of the most obvious, and why I'm so bullish on XRP is because it seems to actually enable this solution and thus the internet of value. What do you think about that, Vandal, if you're following my train of thought there?
Yeah, I do agree with you. I think, in my opinion, I think there will be specific digital assets designed for different uses, for different multi-trillion dollar problems they're trying to solve that will play a critical role in the new financial system. Everything is evolving. Friction is going to go away in the future because of blockchain technology. You're going to have more than one, possibly more than one world reserve currency. It's possible. I'm not saying that's a sure thing for sure, but it's interesting because the the head of the Federal Reserve, Jerome Powell, actually said not too long ago in a conference that we could have possibly multiple world reserve currencies. So these were his words. What's interesting is that's actually achievable in a system that we're moving into. It's possible. We just don't know. We can only speculate and look at the different outcomes and probabilities. But at the end of the day, I think XRP is going to play a critical role as a bridge currency because that's what it was designed to do from its inception, to move value, trillions of dollars, be a bridge currency in the middle, remove all the friction in between. And I don't think that's going to change. I just think it's all about timing. And I think when they're ready, it's going to play its role. So I don't see that changing at all. Now, will there be other assets that kind of work alongside it? Of course, I'm sure there will be, but they're all going to have different roles and they're not necessarily competing with one another. These systems in place are designed to complement each other for the new financial system. And really, that's to serve the elites. It's not to serve you and me. Let's be real here for a second. You have power players that control the world, shadow figures, people we have never heard of, and a lot of them meet at the Bank of International Settlements. These are the people that are the architects of the financial system. And I know a lot of people think a reset is going to happen tomorrow. Some argue, like myself, we're living through a reset. It's a slow motion process. But you have to understand that these power players and central planners, they will try to squeeze as much juice out of the currency system as much as they possibly can. And at the same time, they will orchestrate or manufacture a collapse through significant currency debasement and allowing something to break in the market. Because every collapse historically has served their best interests as a buying opportunity to consolidate power and wealth and push a lot of the wealth higher up the food chain. So while people think that would be a horrible thing to society, it would actually be very beneficial and attractive to these power players and these institutions. So I don't think that's going to change. And I'm not being cynical or pessimistic. It's just sometimes you got to study history to understand how things are going to play out, because they don't always play out the same way, but they often rhyme. And we're seeing the same patterns play out today. They're debasing the currency, monetary inflation, funding government deficits, while the economy is doing horrible in real terms. People can barely make it. This is a decline in purchasing power, and every currency reset really ends like this. It's slow motion. It happens over time, but at some point, something will fundamentally break, and they will introduce a new system in place as a solution to the problem they created. But they're going to win either way. So the key is for us to position ourselves strategically and identify opportunities that aren't really being announced on the mainstream media, because that's where the real opportunities lie.
Yeah, and it's unbelievably amazingly how well timed, preceding the 2008 financial crisis, Bitcoin was given to us. It's remarkable that we're in a stage now where the system's losing trust, and we have this new trustable system being built right before our eyes. For anybody to touch on what you said there, Vandal, about not being pessimistic. You're being real with the situation, and people can bury their head in the sand as much as they want, or they can do something about it, which is a lot of what you talk about. Owning assets is not just about getting rich at this point. It feels like a survival game, right?
It is. Mm-hmm.
So it's extremely important to understand all of these things that are happening. And I think one thing that I want to maybe riff with you a little bit before we touch on some other subjects is this idea of a crash that's coming. I think everybody, including myself, sees big merit in a crash coming. Some would call it the mother of all crashes. A question that I have is, does that need to happen, or can they just continue to do what they're doing, which potentially leads to the same results, and that is that you have a class of haves and have-nots. What we see is the top 1% of earners grow with the money supply, whilst the majority of other individuals just fall further and further down the ladder. We continue to see institutions own the lion's share of assets due to understanding the system and leveraging it, whilst the majority of people get poorer and poorer. I think we're heading to this kind of class of haves and have-nots, and actually I think that fits their agenda that they could achieve through a kind of dopamine induced continuation of the system rather than a crash of it. I guess one question I have is, why do we need to have a crash? And I know you're going to hit me with markets have always had crashes, and I think that's an absolutely fair comment to make, right?
Yeah, well, what's important to differentiate is what drives the real economy and what drives financial markets. Because we could say since 2009 or after that, it's primarily been liquidity that is the driver of all financial assets for the most part. So what's interesting is historically, a lot of crashes take place when overvaluations in asset exceed the amount of liquidity. And what's interesting is they get pushed up, asset prices get pushed up to irrational levels, and eventually they have to cool down because nothing just goes up in a straight line. So, of course, there will be a cool down. Now, the question is, because nothing goes up in a straight line, but the question is, how steep will the cool down be? And that's difficult to know because there's many different factors that can determine how severe a crash is or how mitigated that crash is. We just really never know. But one thing is for certain is that nothing continues to go up forever. There will be pullbacks and declines because at the end of the day, they keep debasing the currency, issuing credit into the system, printing money. They can call it whatever they want, adding liquidity, debt creation, credit creation. It doesn't matter. It's basically printing money, and the byproduct is currency debasement. So as long as we're going that route, and that's monetary inflation, pushing asset prices up as they increase more currency units into the system, asset prices continue to go up because those asset prices are denominated in that fiat currency. We use the fiat currency to measure the asset prices. So they could keep, kicking the can down the road, as you said, and increasing the wealth gap, widening the wealth gap from the rich that own the assets, making them richer, and the poor get poorer. But historically, every crash or severe correction has actually helped the rich get richer faster. So it's actually in their best interest to do so. And if they keep kicking the can down the road, regardless, something will break at some point, and it will pull markets down that are heavily tied to liquidity and driven by liquidity. So it could be a global credit contraction. It could be a reverse carry trade. It could start at the bond market, from not having enough buyers on the other end. It could be anything, it's really hard to know. They could blame it on a cyber attack, some narrative, conflict. Historically, there is always going to be some manufactured event or crisis that lead to a cool down. And I think it's important to understand where we are in the cycle because, if you understand market cycles and where we are in the cycle, you can at least forecast to some degree future turning points. You won't know exactly when they happen, but if you know where you are today, you can have a sense of what might come next. And based on where we are today, there's a very high probability that there is going to be a cool down at some point. And when I say cool down, yes, I'm talking about a correction or a crash. We just don't know how steep it's going to be. But this would serve as a very attractive opportunity to wealthy individuals and power players, institutions, BlackRock, Blackstone, because this is what they love. They love a Black Friday sale because it allows them to continue their agenda by consolidating wealth and power. For example, if they want to introduce central bank digital currencies, or call it stablecoins or a Fed coin, have a more centralized system, which is clearly the goal, they need to wipe out regional banks. Okay. We've had already 30,000 regional banks wiped out since 2010 over the country. So clearly that's the direction they're going in. So for example, if you're looking at it from their shoes, in order to achieve their big agendas, they have to have a wipeout of the space. Now, in order to achieve that, they create an environment that makes these companies and entities go bankrupt and get liquidated. So in order to achieve that, they have to manufacture some event to pull the markets down or make the markets turn. So I think all the indicators support that there will be some sort of event that takes place. We just don't know when, and we don't know what it will be.
Yep. No, I would absolutely agree. I think it seems quite obvious that there is going to be a crash coming, and what exactly that entails. You know, we can speculate on what it may be in terms of what causes it or how severe it may be, so on and so forth. But I think we can all agree it's quite obvious that there is something coming. You know, the question really is when. And I think one question, when a lot of people hear this, they kind of, including myself, think, well, how do you position for this as a asset investor? Now, of course, nothing that we do or say on this show is financial advice. We're just giving our own opinion on how we see the markets and sort of how we're playing them. Given what's expected, let's put a theoretical situation out there. Let's say you own assets right now. You've got a chunk of the S&P, you've got some crypto, some Bitcoin, some XRP, you've got some gold and silver. Knowing potentially what's coming, what would you do? Is the question. Because I know this is an area that you really excel in.
Yeah, I try my best. I'm not an expert. You know, we all try to do our best and navigate the markets with clarity. Now, each of us have different financial goals:
Of course,
short term, medium term, long term.
financial
I think the
situations
questions,
also.
yeah,
Just a theoretical sort of straw man of, you know, we've given the avatar Vandal this money and he's got to go through what we're going to go through as human beings. What would you be thinking right now? You don't need to go specifics in regards to assets, but in regards to
yeah,
maybe a
sure.
strategy.
Yeah, absolutely. I think it's important to have liquidity on hand.
Yep.
I think it's important to have some cash because it's always important to have an emergency nest, because you never know what could happen. You got AI and robotics, you know, creating layoffs, disrupting the job market. The economy is really not doing well in real terms.
Do you know,
So you always want some cash.
to jump in there, Vandal, did you see that chart in regards to job openings and the S&P 500 from
The
when
gap.
ChatGPT came about? I was like,
Yes, I did.
and this is something else. I mean, we need really 5 or 6 hours for me and you to hash everything out. Plus, I think in regards to everything going on, so we really are trying to get this into a more compact format for you guys. But did you see that? I mean, one does have to ask. There's been very clear correlations between employment and the economy. Now, and
Yeah.
maybe this is just a blip in that correlation, there does seem to be a move away, and this is all about the future world that we're moving towards. Maybe we can tackle that. We can tackle that now, or we could tackle that after we've sort of spoke about how we're looking at progressing in the future.
Yeah, sure. So I'll just finish up what I
For
was
sure.
saying real quick. I think people should have some safety nest, because you always need to be prepared for a rainy day. Now, as for positioning, and I like to call it tactical asset allocation, because we're living in a period where you can't just do the 40-60, traditional methods of investing, or hold bonds. I mean, this is what they're going to tell you. Okay, hold bonds. It's the safest thing to do. The period we're living in, holding bonds is one of the most riskiest things, in my opinion, because the bond market continuously sees cracks, and they pop up and they inject liquidity to cover it up to prevent a systemic collapse. So eventually they're going to let it collapse and they'll introduce a complete new system at some point. So the point I'm making is that right now, the way I view the markets is I'm very optimistic for the short term. Okay. I think being risk on is critical in this type of environment if you want to capture asymmetric upside, because what's so important is for everybody to understand is, as an investor, you always want to ask yourself this: should I be more aggressive or should I be more defensive in the medium term? And when I say medium term, I'm talking about 1 to 3 years. And I like to think of it as a speedometer, kind of. 0 meaning all cash out of the market, 100 on the other side of the spectrum, all in risk on assets. That's the speedometer. And you got to ask yourself, based on your personal situation, your financial situation, your goals, your do you have dependents, your risk tolerance, your portfolio size, your cash flow situation? Where do you fit on that spectrum from 0 to 100? Because you never want to be at 0 all out, and you never want to be sitting at 100 fully invested in the risk on market. You want to find out, where do you lean on that spectrum based on the macro environment, which comes back to, where are we in the cycle? And I think if you know where you are in the cycle, you have a good sense of how to structure your portfolio on that speedometer. And at the same time, within your portfolio, I think it's so critical to determine 2 things to improve your outcome, okay, from an investment perspective. The first thing is, you have to be very strategic based on where we are in the cycle for your asset allocation, okay? The second thing is, to improve your outcome, is assuming you did asset allocation correctly, you chose fundamentally strong assets that will thrive in this environment, and hopefully in the long term, you'll perform pretty well over time. But the second element to consider to improve your outcome is cycle positioning. So when you're entering that asset, how can you improve your outcome? And the key is by getting in early, entering when prices are undervalued, prices are depressed for that particular asset. So now you have 2 ways of improving your outcome substantially for your investment. But I think it's also critical to include in a portfolio, in this period we're living in, assets that have been around for a very long time, that are tangible, that hold their value throughout historical resets. And that happens to be precious metals, land, real estate, and things of that nature. But gold, I think, is so critical for people to at least take a look at and start investigating, because gold has preserved value and withstood the test of time throughout every monetary and currency reset and collapse of every empire throughout history. And it's still here today, with central banks becoming net buyers since 2010 and still heavily accumulating gold today, despite the fact that we're going digital. They're buying gold. So that must tell you something. So I think gold is important to have, not as an investment, but as monetary insurance against failing fiat currency systems. But I am completely risk on in this market, and I'm bullish. But very soon, that tone is going to change, and I will demonstrate what it means to go against the crowd, because everybody's a contrarian until it means doing contrarian things. And I'll be getting out a portion of my asset allocation, de-risking, when everybody is going to call me crazy and say I should be buying. And yeah, that's how I operate. So
Look at Michael Burry, right? Everybody called him crazy for. I mean, it took a long time. They actually took a hit on a lot of those options that they took out on betting against the crash of 2008. But how sound that idea was, and I think often when you get met with that criticism, I mean, that sets up for a real winner in regards to something to come. I do, and obviously, Vandal, I do follow you as it is, and are going to continue to do so, because I think you just offer such an amazing insight into not just the crypto space, but the economic world as a whole. So it really is a blessing to have you on. We mentioned gold there. I have somewhat apologetically, somewhat not apologetically, actually said, look, the tokenization of gold is interesting. A lot of gold bugs I know, some of them mutual friends of ours. When you mention tokenization of gold, it's like a kind of red whatever to a bull. It's just, it goes against everything they stand for as gold bugs. And I've kind of pushed back on that a little bit and really interested in your take and actually said, look, with tokenization of gold, you can give it a whole new life of utility. In fact, one of the reasons we moved away from a gold standard, there were multiple, but one was why we started giving our gold for paper notes was due to convenience. And if you look at how international banking moved, you didn't want to, you had security risks, all sorts. What do you think about tokenized gold? Good or bad thing, broadly?
Well, I think it has its pros and it has its cons. I'm not going to say it doesn't have clear benefits. Oh, if I had to pick a side, physical, tangible gold any day.
Yep.
I'm not interested in this tokenization stuff, and I'll tell you why. Because when you tokenize gold, you don't have full ownership anymore, even though they tell you you do. Essentially, your ownership is now conditional. It's not absolute. Okay. There's a reason they want to tokenize everything. It's for pure control. This will be tied to the blockchain, to your digital ID, to your credit score. At the end of the day, once you synchronize all these systems together and tokenize these assets, that's it. You've given up your sovereignty and you've given up your true ownership of being anonymous with your assets. And again, tokenized gold, it has its benefits. It's easily transportable, liquid, accessibility, fractionalizing it,
You could use it for DeFi, you could give it a whole new yield aspect. I 100% agree with. So I think the real threat with tokenization of gold is that it leads to essentially that or nothing.
And yeah, it's all based on terms and conditions at the end of the day.
But I think in a world where both physical, you have the choice to own physical gold, which has all the benefits that it does and are very clearly defined. But there's also this kind of way to tokenize gold, potentially use it in global trade, potentially if you could get people to accept that tokenized gold was what it said it was, and of course DLTs can help with that, proof of reserve, things like this, can apply to different things. So I do think I'm kind of on the fence. I 100% think that, and we're talking about this multipolar system that we're moving towards. Actually, the tokenization of gold could give it a role in that. But I also do think that your warning, which is 100% right about, look, the US government in its history has confiscated gold from people. You weren't allowed to own, I think it was over 5 ounces of gold at one point.
Well, this is how they're going to confiscate it.
Yes, this is the concern. Yeah.
That's basically what it is. I mean, look, people can sugarcoat things as much as they want, but I'm looking beyond the veil here. I see what they're doing, all right? Yeah, I know the game. I mean, I'm sure you do as well. It's very obvious what they're doing here, okay? Since when does the big institutions and the power players like the Bank of International Settlements and the central bank, since when do they care about you and I, the little guy? Everything they do is about control. It's about amassing wealth. And at the end of the day, pushing their global agenda. That's it, really, in a nutshell. And all we have to do is be able to see the truth for what it is and, think and look at things differently than the masses to understand what they're doing and position accordingly and be willing to adapt as it requires.
Yeah.
We can't change the system in the direction things are moving in. There's a lot of scams about that out there, and it's very disappointing to see. But yeah, people need to be aware of what's going on. because I am so done with the nonsense, with all the sugar coating and all this. It's destructive, excuse me, and it's unhealthy because it's allowing people to. It's designed to keep you, docile, just doing nothing.
Yep. Yep.
That's what they want you to do. Do nothing.
Do nothing, own nothing, which is where
Yep.
tokenization steps in. 100%. I'm with you on that. And what do you think? We're talking about this world that we're moving towards. We're talking about sort of how some of the cracks that are starting to show. Let's maybe talk about XRP and how you view that. What kind of a role do you think XRP is going to play, not just in regards to this transition that we're currently going through, but the new world that we're entering? We've spoke about how it could be used as a bridge currency to perhaps facilitate a multipolar world as far as currencies and value systems are concerned. Maybe we can touch on the aspect of on-demand liquidity. What kind of a role do you think XRP as an asset, talking about sort of it more fundamentally, do you think it's going to play in this world that we're moving towards? Because to me, with all these changes going on, XRP just seems like a very blatant coincidence. And maybe it's not a coincidence, if you know what I mean. It's too well positioned given everything that's happening. What kind of a role, what's your thesis on XRP, given your zeal for it at the moment and all the things that are going on?
Yeah, I think XRP is strategically positioned and was designed to be a liquidity solution when things really come toppling down. I think that's inevitable at some point. Now, it's just my belief, of course. We don't have a crystal ball. But yeah, on-demand liquidity, I think it's going to completely liquefy the system when the system needs it most. Okay. I think it's going to create those connections where the disconnects currently are in the system, in the payment system. I think it will still be a bridge currency facilitating transactions globally at scale. I think it will be able to do that very efficiently, and it's going to be very attractive for the big financial institutions. I'm not talking about regional banks. I'm not talking about mom and pop businesses, because I think people really need to critically think about this and understand. The middlemen, you could say nostro vostro accounts, correspondent banking, regional banks, they have no interest in this new financial system. And that's the truth, because they make the bulk of their money from doing what they do. These new systems in place are disrupting their business model. So it's not attractive. So when people say, oh, this institution wants XRP, this institution, no, they really don't want XRP. They don't want any of this stuff because it disrupts their business model. They will be eliminated out of the game. No more middleman. The entities that want this solution are the big players that run the financial system. The Bank of International Settlements. Okay. The World Bank Group has a very deep interest in these technologies. The International Monetary Fund, which is pretty much a safety net anytime a currency or a country runs into a crisis, the first person they call is the IMF. These are the entities that most people never heard of that want Ripple and XRP and different interoperability solutions to play a role in the new system. It's not the regular financial institutions, regional banks, or your Chase Bank. They're not interested in this, because why would they want something that eliminates their business model when they can be making money in the current way they're doing things? Essentially, these technologies would kind of fully disrupt their entire business model to the extreme. So what I'm trying to say is these technologies, some of them, including XRP, in my opinion, is attractive to the financial players that are behind the scenes, that really control the monetary system. And I think it's going to still serve its role, a pivotal role in the new financial system, for facilitating transactions globally, on-demand liquidity, And essentially, I believe the intrinsic value that it brings will eventually reflect in the price as utility and adoption continues to increase. And I came up with this, I thought of this concept and I wanted to share it. I call it the dual chain theory, because a lot of people say, oh, the price will shoot up of XRP when utility happens. But here's the thing, utility is just one piece to the puzzle. Utility and adoption will eventually bring on the main driver of all assets, which is as utility and adoption increase, you'll have more liquidity and value flowing on the network. So essentially, you have this dual chain theory that I call it, where utility will require a lot of liquidity, but all that abundant liquidity on the network cannot be there without utility, if that makes sense. So they go hand in hand, because liquidity is what drives all financial assets. It's based on it's economics, supply and demand 101. So essentially, once those two fall into place, starting with utility and adoption over time, you're going to see that liquidity come onto the network as net inflows, and it's going to push asset prices, or that asset price, much higher over time, since there's a capped supply. And that's how I see it playing out over time. You know, it's hard to say if there will be some event that is manufactured that expedites the process. That's possible, you know, that requires that liquidity solution instantly, that could drive price up. It's possible, but we don't know. You know, we just have to look at what are the probabilities and likely outcomes that could occur. And that's certainly one of them, but it's not something we can, you know, bank on. It's not something we can time either. So just be mindful of that.
There's a lot of variables that kind of go into this. There's a lot of things that seem very probable to play out. I actually love that take. I think that's very much in line with the situation at hand. I think is the best sort of way to put it. And Vandal, I'm mindful of time here. One thing that I want to talk about is 2025. There's only a couple months left to the year. What do you think is gonna, what would be your sort of, we're talking short term overview in regards to what you think happens for the rest of this year? Are you bullish on the remainder of this year? And then what do you think we're looking at in 2026? I know I'm essentially saying, Vandal, please can you predict the future for me perfectly? And I think you're doing an amazing job of giving a great take on it, on everything with sound reasoning. But I know these are kind of questions that have a little bit of trickiness to them, but I think you do an amazing job and have done an amazing job historically of being able to look ahead. What do you think this year still has in store for us, perhaps? How do you see it playing out? Are you bullish, bearish on it? And then what do you think happens in 2026?
Yes. So I'm very optimistic for risk on assets. I think if you're an investor and you hold risk on assets, I think you're going to perform very well. Now, I don't think it would be sustainable for long term. So for the next few months, I'm very bullish. I'm very optimistic for risk on assets, especially assets that are heavily tied and sensitive to liquidity. So for example, cryptocurrencies and digital assets. I think stocks will perform well as well. Now, I still do think a parabolic move is coming. A lot of my analysis and the data I'm looking at suggests that there's a high likelihood that is going to come. And I think it will also be driven by manufactured narratives to drive retail in buying at the top, so that a lot of these institutions can eventually offload their bags and use retail as exit liquidity. Now, we're not there yet. Now, it could also never come. We could have a moment where there's institutional distribution going on and we slowly fade down lower into a markdown phase. But I don't think that's going to be the case. I think there will be a parabolic move. I think there will be a blow off top. We're actually seeing similar patterns from historical crypto cycles in terms of the dynamics of within the crypto market that are playing out. For example, ETH retesting, it's high, it's support. For example, these are similar patterns we saw in previous cycles that eventually led to that parabolic move, altcoin season, explosiveness in crypto. So to answer your question, I'm very optimistic for the next few months. I think cryptocurrency is going to do very well. I think we will have a parabolic move. I think there will be a blow off top, and I'm not just speaking from hopefulness or wishful thinking. The data suggests that's a high probability. But I do think at some point it would be unsustainable. Now, this blow off or this continued bull run could spill over into 2026, early 2026. I think it's possible at the rate that we're moving at from a macro perspective, but there's no guarantee. I mean, imagine, just think about it for a second. If everybody was saying that this time is different, and a lot of people are saying this time is different, and the majority of people think it's different. And in reality, the contrarian thing was this is exactly the same as every cycle. It's just something to think of because we just don't know, but we are certainly seeing some similarities and some parallels. But I'm optimistic. I think it would be good, but always be prepared to take profits as we head into strength because you don't know how long it will last because nothing moves up in a straight line.
100%. And I think it's kind of deja vu, perhaps, in regards to people saying this time is different to what we saw in November 2021. And even I got caught certainly early 2021 on the side of that, going, maybe this time is different. And then it plays out perfectly. So I do think people should bear that in mind. Vandal, it's always an absolute pleasure to have you on. We are going to leave links to where people can find yourself, what it is you do, access to your Patreon. You've got a YouTube channel you're very active on. You're also very active on X. We're going to leave links to all of that in the description, guys. Vandal is a good friend of the channel and somebody who I actually look forward to having on in regards to insight. So, Vandal, is there anyone you want to send people? Is there anyone you want to give a shout out to? I know you've recently started a Patreon. I've heard nothing but amazing things about that. People could go and check that out.
I really appreciate that. Yeah, thank you for the kind words. Well, first of all, I just want to say what you've built is remarkable. Love what you're doing, Rupert. Just keep at it, And I will give a shout out to my brother,
of course,
Versan Al-Jarrah. He's the founder of Black Swan Capitalists. If you like, go follow his YouTube channel. He manages that, and we'll be doing more conversations together. But yes, that's it. I really, really appreciate everything, Rupert. It's always good speaking with you.
The pleasure is all mine, and we're going to leave a link to Vandal's brother Versan also in the description. That's it from us, guys. I'm sure Vandal will be back very soon. We'll see you all in the next podcast.